Ladies and gentlemen, good day and welcome to IIFL Capital Services Limited Q2FY26 earnings conference call. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management for the opening remarks. Thank you and over to you, sir.
Thank you. Good afternoon and welcome to the second quarter FY26 analyst call of IIFL Capital. I am R. Venkatraman. I am the Managing Director and along with me is Ronak Gandhi, who is our CFO. First and foremost, India's economy has continued to demonstrate resilience and strength in spite of facing global trade tensions and higher tariffs imposed by USA. Fortunately, GST reforms, festive season spending, and incipient revival in both manufacturing and services have supported steady economic growth. Looking ahead, we think second half for FY26 will be better, and that is supported by policy stability, demand growth, lower GST rates, spurring consumption, and also a benign liquidity environment. Coming to our results, consolidated revenue from operations for the quarter stood at 592 crores, down 4% quarter-on-quarter and 8% year-on-year. Coming to quarter-on-quarter basis, retail equities was at about 271 crores for this quarter versus 264 crores for the Q1 FY26, which is up marginally 3%. Institutional income, which comprises both broking and investment banking, has decreased 9% and it is now standing at 186 crores versus about 204 crores for the previous quarter. Financial product distribution income has decreased 10%. It is now at 130 crores versus 145 crores for the previous quarter, and that is because of certain transaction income which was lower in this quarter. There's a hit on our MTM investment, and that is primarily because of price reduction on the BSE shares, which materialized in the previous quarter. Employee cost has decreased from 176 crores to 150 crores in this quarter, basically because of lower provision for variable pay in this quarter. Depreciation has decreased marginally by 7%. Fees and commission increase has decreased 12%, 134 crores versus 119 crores in the previous quarter, which is in line with the revenue trends. Admin expense was flat at 87 crores. Operational PBT, which is before other income and MTM income, is at about 160 crore, which is flat and on a quarter-on-quarter basis. Coming to year-on-year basis, retail equities income was 271 crores. In Q2 FY26 versus 356 crores Q2 FY25, a decline of 24%, and this decline is primarily on account of the new regulatory norms on F&O trading. Institutional income, which has increased 5%, 186 crores versus 177 crores in the same quarter last year. FPD income has increased 22%, 130 versus 106 because of increased focus on distribution products and income. Employee cost increased 3%, 149 crores to 150 crores. And then depreciation has increased 13% from 13 crores to 15 crores. Fees and commission income has decreased 17% to 142 to 119. Again in line with the revenues. Admin income was flat. Operating PBT is at 160 crores before MTM, and that is a decline of almost 20% year-on-year basis. Coming to some housekeeping numbers, our average daily turnover was 2,63,568 crores, which is a split of F&O at 2,69,56 crores, and cash was 2,600 crores approximately in the quarter that went by, compared to 2,23,232 crores, of which F&O was 2,20,263 crores, and cash was about 2,968 crores. And basically, there was an increase in average daily turnover in Q2 versus Q1, and that was primarily because of increase in F&O. If you compare with the quarter last year, same quarter last year, FY25, that quarter we had a turnover of 3,32,186 crores, which was about 3,28,728 crores in F&O and 3,450 crores in cash, which was a decline of almost 21-22%. If you look at our market share, consequently, then our market share after adjusting for our market share, if you consider overall market share, that is basically unchanged at about 0.64%, which is about cash market of about 2.52 to 2.55%, and F&O was about 6.64% to 0.62%. But the good news is that if you remove non-crop, because we believe that a large segment of crop which is not addressed by us, then non-crop market share we have seen an increase in both F&O as well as cash. Now cash is about 3.87% and F&O is about 2.65%. The other number is about our cross-sell assets, because we have seen growth in our cross-sell assets. Currently, cross-sell assets stands at about 44,000 crores, which is 60% is ARR and 40% is non-ARR. ARR assets is mutual fund, PMS and AI, which is now standing at about 27,000 crores. With this, we are open for any questions that you may have. Thank you so much.
Thank you very much. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our first question comes from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi, good afternoon, sir. How are you?
Good afternoon, Prayesh. How are you?
All good, sir. So first question is on this, SEBI consultation paper that spoke about, brokerages going down sharply from 12 bips to 2 bips. And obviously there has been some media talks around it that the regulator might consider increasing that lower limit of 2 basis points. But either way, what could be the impact that we could see on our earnings because of that?
See, if you look at this discussion paper is yet to become a law. But as you said, there has been media reports that the 2 basis point might also see some increase. So on the institutional segment, a bulk of our brokerage comes from foreign institutional investors, and where the capping is not applicable, mutual funds, however, are still a significant player on this. So if there is a reduction in the brokerage charge, then there will be an impact on our income. But at this point in time, it is very difficult to ascertain exactly what will be the impact. But for sure, if the brokerage falls and there's a cap, then there will be an impact.
So, can you share some insight into what is the share of revenues of domestic mutual fund in your institutional equities revenue?
Unfortunately, I'm not able to share that details with you.
Sure, sir, no worries. So the other question was on the distribution income that has seen a sequential drop. Ideally in this quarter, unless it is insurance related, which could have possibly impacted by GST sales, but financial product distribution revenue sequentially has gone down. What would you
Yes, sequentially income has gone down by almost 10%. It was one. We had some NCD issuance in the previous quarter and other such products where we had some upfront income. That is the reason for this decline.
Okay. And sir, how is the wealth management business shaping up? How many RMs have you hired so far? And
actually, to be honest, I think last time also the same question was asked.
Right.
So as of now, we are roughly about 50-55 RMs in that range. This quarter, we have not seen some significant increase in the RM, but it is virtually flat. And the business is shaping up well, and we are seeing some assets coming, relationships happening. And so as of now, if you ask me, I'm happy with the state of the progress of the wealth business. And additionally, what is also happening is that as a rub-off effect, our own existing 450 RMs which are there in our broking business have also started slowly upgrading and focusing on getting more cross-sell assets, and that is evident in the fact that our cross-sell assets is growing and has reached about 45,000 crores, 44,000 crores.
Right. So, how many RMs are there on your retail business, and how many of them are worth upgrading to a wealth RM?
So our aim, we have about 450 RMs in that, and we hope that a bulk of them will get upgraded. Okay.
And so this 50-55 RMs that you've added, these would be like RMs of high caliber and income, and that is salary levels upwards of 50 lakhs, or it's more in that 15 to 20 lakh range. What kind of RMs?
This will be the affluent and HNI RMs, so their salaries will be higher.
Okay. I got that. Any data that you want to share with respect to, apart from the AUM data that you've mentioned, any number of families, incremental number of families that you've been able to onboard in this first half?
Actually, once this business scales up, maybe after 2-3 quarters, we'll share more details.
Got that. And so last question on the broking business. We've seen a very strong uptick in volumes in October, and all these talks about regulations on the F&O side have mellowed down both by the FM as well as the government. Do you think that the run rate what you've seen in October can be sustained going ahead? And if there are no further or any major regulations, how should we kind of see? I know it's a crystal ball gazing, but any thoughts of yours would be helpful to understand.
Right. You rightly pointed out it's a crystal ball gazing. So as of now, there's no clarity about what will happen. Although, right, like you said, we are getting different signals from the regulators and the powers to be. But having said that, I think one should not look at on a quarter basis etc. because India is still an underpenetrated market. So we think that as the Indian economy goes from 4 trillion to maybe 6 trillion and 8 trillion in the next 10-15 years, so there will be a secular increase in equities volumes. So the long term, if you have a long term perspective, then the trend is clearly upward sloping.
Sorry, sir, just one last question. Any breakup of revenue between F&O and cash that you can share on the broking side?
So actually, our broking business, roughly it is about 60-40, no? It will be broadly in a 60-40 range. 60 cash and 40, 60 F&O and 40 cash.
Thank you so much, sir.
Thank you.
Thank you, sir. Our next question comes from the line of Harsha from HSBC AMC. Please go ahead.
Yeah. Hey, hi. Thanks for the opportunity. Just few questions. One, carrying forward from Paresh's question on wealth management. So from a business perspective, if you look at our existing business, in this first half, we have done around 1,200 crore of revenue. Again, not trying to understand anything from a quarter-to-quarter perspective, but over the course of, let's say, next 2 or 3 years, what is the contribution you think that our distribution or wealth management business can do to our overall IIFL capital as it stands now?
See, we hope that over the next maybe 2 to 3 years, this business will become profitable. As of now, we have continued to invest and build this up. So it will be a big crystal gazing part on my part to give an exact number. But we think we are quite optimistic because we think that asset gathering and getting ARR revenue is the way to go. And as I mentioned to you earlier also, that our focus is to get assets. So we are at about 45,000 crores of assets, out of which 27,000 crores of assets in mutual fund, AIF and PMS, and our aim is to grow that component.
What proportion of this 44,000 crore incrementally has been onboarded by the new team that you hired in the last 1 or 2 years?
See, basically, I think so on an incremental basis, it's difficult to say which because what has happened is that after the new team has joined, both existing team and the new team have been focused on getting ARR assets. So it is a combination and synergistic effects of both. And as I told Prayesh also earlier, once the business scales up, then we'll be sharing more details on.
Understood. And in the retail business, I just have 1 or 2 data questions. Retail business that you reported, what is the breakup in retail broking and the interest income that you earn on the M2F book?
So our MTF book is roughly about 1,500 crores. And kitna interest is?
That breakup we have already given. You can see that breakup in page.
1 second, I'll just tell you.
Okay, so the 105 crore will be the interest income, and I think 160 crore will be the retail broking. Is it correct?
Mota, that's correct.
Yeah. And okay, so that is one part. And just last thing is from me is I understand that this is a long gestation period. We've seen this with other wealth companies also. Once they start making money, they make a lot of money. But just to understand current context mein, how much investment that you have done in this new wealth business in this financial year?
In this financial, if you look at investment, basically manpower cost is the biggest investment, and we have invested. So as of now, last year we made a loss of about 24 crores, and this year for the first half, we would have lost about 20-25 crores.
Understood. Okay, so you have intensified investments in this year.
Yeah, because recruiting RM is becoming a big challenge because of competitive pressure. So we are being prudent.
Understood. Okay, yeah, that's it from my end. Yeah, thank you and all the best.
Thank you so much.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Aditya Bhatia from Electrum Capital. Please go ahead.
Hi, thank you for the opportunity. Could I just get the split between the IE and IB revenue, please?
So on the total institutional income, which is about 1,986 crores, so it will be roughly about I think it's like 1 second.
Is it still 60-40?
It will be more. I think 60-40 is correct.
Okay. And
but one second. But having said that, I want to give you a caveat because in some quarters, if there are a large number of deals that get closed, then the IB component might increase. But broadly, what you say is correct.
Okay, understood. And I see that you haven't added any RMs this quarter, but any plans for the rest of the year for H2?
See, as I mentioned earlier, what is happening is that there is a huge competitive intensity in the recruitment of RMs. So basically, as a part of our prudent strategy, we decided that it's better to upgrade our existing RMs, train them and empower them instead of going out and acquiring RMs at any cost. So we are being prudent.
Okay, understood. And would that be a better cost efficiency in the long term, despite?
Yes.
Okay.
Yes.
Understood. Okay. That's all from me. Thank you.
Thank you.
Thank you, sir. Our next question comes from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, thank you for the follow-up again. So just extending this wealth management as a strategy, long-term strategy, you rightly mentioned about the competition intensity in the RM hiring. How would you position yourself? How would you position yourself in terms of whether expanding into the top 10 cities or look at tier? Because IIFL as a brand has a very strong presence in lower tier cities as well. Do you think that will be more of a prudent strategy to expand or more on the tier 2, tier 3 cities? And what is your thoughts there?
See, to be very honest, as you said, that IIFL is a very strong brand when it comes to broking space. So as of now, thanks to our broking business, we are present in a large number of towns and cities. So whenever we have an existing broking presence, I think the best plan should be to upgrade ourselves and make sure that we address the market there. So I think it's wrong on my part to say no, we'll be focusing only on tier 2, tier 3, but we are focusing on all the cities where IIFL has a presence.
Okay. So one question was on financial statements. Your mark-to-market investments was a 44 crore kind of a negative in this quarter. This is pertaining to BSE shares or what it is pertaining to?
It is pertaining to both BSE shares and NSE shares. We have bought some NSE shares for down selling, so on that we have taken some hit.
Okay, and they still continue to hold them or?
Yes, we continue to hold them.
Continue to hold them. Okay, got that. And sir, any guidance in terms of how should we look at your overall costs panning out for FY26 with regards to employee cost as well as the other OPEX?
See, actually, my view is that hopefully from second half, as you pointed out earlier, also all exchange volumes are picked up, so we should see some benefits in the cost to income ratio. But on the long term, our view is that this year we continue to invest in the wealth business, so that is obviously affecting our cost to income ratio.
Okay. And sir, how much comfort does the balance sheet provide you to kind of scale up the margin trade funding book?
See, as of now, our total net worth is about 2,800 crores. 2,800 crores. So that gives us, and our margin funding book is only 1,500 crores. So we think that there's enough scope for us to grow.
And that will increase based on the specific borrowing we do.
Okay. So your headroom is another 2,000 odd crores on the current balance sheet itself?
It will increase based on the specific borrowing. So you can take 50% of the net worth and 50% from the specific borrowing. The more we do specific borrowing, we can increase this book.
Okay. And
so to answer the question, I think another 1,000 crores can be added very easily.
Got that. And sir, there are some external managers that you mentioned in your presentation. Now, I'm understanding these would be on the mutual fund distribution side and the business model that you are kind of building up.
Yes. Sub-broker, they'll be both mutual fund distributor as well as sub-broker network.
Okay. What is the kind of sharing you do with these guys on the mutual fund distribution as well as broking? Is it 70% or more than that?
You know that business because it's a highly competitive market. So we are aligned with the market and there'll be significant sharing with the distributor.
Got it. Thank you so much, sir. Yeah.
Thank you so much.
Thank you. Our next question comes from the line of Lalit Dio from Equirus Securities. Please go ahead.
Yeah, good afternoon, sir. So 2 questions. Firstly, on the distribution income. So could you also just give us the split between recurring revenues and the TBR transactional revenues for this quarter as well as the 1H?
So if you look at it now, mostly what is happening is that, as I mentioned earlier, 44,000 crores may roughly 60 is ARR and 40 is non-ARR. So income will also be broadly in the same range, correct? Yes.
Perfect. And sir, just on this, on the investment banking piece, so if we look at it, like, given the we have a strong IPO pipeline. So so just wanted to understand how should one look at this overall investment banking revenues for this year as well as the next year, like, given the pipeline which we have?
No, so basically what is happening is that we are quite optimistic about the deal pipeline, and there are various deals in the various stages of completion. So I'm quite optimistic. Although it's very difficult for me to give an exact number कि कितना deal होगा कितना नहीं होगा.
Right, sir. Sure. Yeah, thank you.
Thank you, sir. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Harsha from HSBC AMC. Please go ahead.
Yes, just one thing on the wealth part. Last year you were doing quite a bit of building also with respect to tech product. And this year almost everything is built, right? You just need to train the RMs and then just go tell them to get clients and get the AUM, which is of course the most difficult part. But from a back-end perspective, yeah, that's the most difficult. But from a back-end product and tech perspective, is everything ready?
Yeah, from the back-end perspective, I think we have done quite a lot of work. So we have implemented Wealth Spectrum software. We have invested in a lot of reporting software. We have upgraded our trading software to Omnisys. So we've done a lot of work, but the most difficult thing is going out and getting assets.
Yeah. Okay. So means from platform tech, everything is ready.
I think platform time, I would say, not everything, maybe 80% will be there.
Okay. Oh, good enough. Okay. Just one clarification. In the presentation, we have written M2M on investments and others as a 44 crore loss. But in the reported result, it is a 25 crore loss. What is the difference in that?
No, I think that will be because of NSE shares. So I'll ask and give you the exact answer.
Okay. Okay, that's it from my end. Yeah. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, just a gentle reminder, anyone who wishes to ask a question may press star and one on their touchtone telephone.
So thank you so much. And if you have any other further questions, please feel free to reach out to me or Ronak directly, and we'll be there to answer any question that you may have.
Thank you. As there are no further questions for the participant, I would like to hand the conference over to the management for the closing comments.
So thank you so much for joining us. And if you have any further questions, please feel free to reach out to us, and we'll be more than willing to answer. Thank you so much, and have a nice day.
Thank you so much, sir. Ladies and gentlemen, on behalf of IIFL Capital Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.